So good morning. Thanks for meeting me today. Quick little disclaimer, no alerts. You guys know the deal. Trading is risky. Track record, success, demo, go. All right, so today, so we planned, how many of you caught some of these trades today? Just out of curiosity. We planned a bunch of them in boot camp. We had two. We actually got pretty lucky. This was our pound. You can see our green zone here for the pound, and then our target was through here, which seemed to exceed that a little bit. And then we had the euro too. So decent day for boot campers if they traded through the plans. Anyway, so today what I want to talk about is they unleashed, they did what they do. So when I was in Spain and the FX Street crew were very gracious hosts. When I was in Spain, when was it, last month before, I noticed a lot of, we're just chatting to the attendees of the conference last month. Thank you, Maud. Yes. I have, my senility has definitely kicked in earlier than I anticipated. But one of the things, talking to the attendees, one of the things I noticed is that everybody had a fairly rigid sort of approach to the market. And this isn't a criticism, it's an observation. All right, what I mean by this is that, you know, if I said to a lot of people, I said to a lot of folks, well, what do you think is going to happen today? Or over the next week? Okay? And I either got responses to the effect of, well, I only trade on a daily chart, I only trade daily trends, I don't really care about anything in between. Okay? Fine. Then tell me about the daily chart. Tell me about what you think is going to happen. No, well, I'm just waiting. All right? Or I just scalp a little bit, so I don't really worry about what's going to happen on the medium term. Fantastic. Then tell me what's going to happen in the next hour. Well, I don't really know. I just kind of wait. Okay? Point being is that there's no reason to limit yourself on a repertoire basis, right? Because the market is fractal, right? And you guys have heard this word thrown around quite a lot. So your daily strategy is perfectly applicable to an intraday one, which is perfectly applicable to a medium-term strategy. All right? So what I'm trying to say to you is there are ways and means to go about trading longer term and shorter term and being the same person. Okay, does this make sense? Now, one of the major criteria, however, is that you actually plan some stuff. All right, so today I wanted to talk about that a little bit. Okay, and I'm doing a little newsletter 2-3 times a week. It's free if you want it, David at FX Bootcamp. And it looks like this. And the reason I'm mentioning this, because I encourage all our bootcamp members to do the same thing for themselves, just in a trade planning process. Okay, so here is the one from the 17th, and I'll show you today's one too. But so here's how I do my planning, and you might want to look at doing the same for yourself or whatever. It's entirely your product, but it's just an idea. Okay. And the more you do this sort of planning, the easier it's going to become and the more accurate it's going to become, right? Because when you, in one's trading, I don't know why it's flashing from my screen to, all right, anyway. Big moves today. About freaking time. Okay. What goes into I'll pull out that Word document in a sec. What goes into a trader? Okay, and I'm gonna hurry through here because it's not really part of my presentation. But one, and now you got to be a decent analyst, right? You got to know how to read a chart. Okay, and not just read a chart. I'm talking like predict the future. Okay, this was something else I saw in Spain. A lot of people reacting to the chart, not anticipating it. All right? So be able to read a chart and then predict the future. Am I right? And how are you going to do this? By practicing trade planning over and over and over and over and over again. Now, there's strategies out there where, you're basically using a reactive system, let's call it, right? Where something crosses this or something crosses that and you do X, Y, and Z, which is fine, I guess. But the market's definitely predictable to a large degree. Would you tend to agree with that? So I would encourage you to go ahead and learn how to do that, all right? And, it's not rocket science. A lot of it's experience, but, there's a lot of things going on. Okay, number 2, trader psych. Okay, I'm just talking about the components to trading. And then 3, money management. And these are sort of the major components here. All right. So the reason why I'm bringing this up is from this aspect. If you are, how do you feel about having a strategy where where you have some stuff on for a couple of days, some stuff on for a couple of hours, some stuff on for a couple of weeks, and you have this sort of smorgasbord, right? Because there's trends going on the longer term, and then there's trends on the shorter term, and then there's trends on the intraday. So what I'm trying to tell you is, don't limit yourself to trading just on the shorter term stuff. Okay? Because the market doesn't always trend on a daily basis. In fact, it consolidates for the better part of 70% of the time. So if you're only trading daily trends, you're going to be in the market 30% of the time, and you better not miss that 30% of the time, otherwise you're going to be doing a lot of just staring at the computer for a year, literally. Okay, anyway, so when I do my planning, this is the sort of thing that I look for, and I don't know why this keeps clicking back, but okay, so I'll do, and if you want this, just email me. Why is it doing that? Sorry, guys. Okay. When I do my planning, now the screen's gone black a little bit. You guys got a black screen? Now we've gone back to the chart. Okay, nonetheless, never mind. It's not doing, I just tried to drag something in front of it more and it wouldn't let me. That's fine. It's not the end of the world. I can work with what I have. Okay. So, yeah, I mean, possibly, Mike. Yes, possibly. Okay. Let me finish up and I'll define sort of more what I was talking about. And you might, if you're in the States and you've got FIFO issues and things and hedging issues, then open another account. It's not a big deal. Have a few accounts to work with. You might have a spot trading account and then a swing trading account, and what works for you there. Now, when I started trading, everybody said to me, trade on a daily chart. It's much easier. It's it's much easier there. Trade on a daily chart. And they were right from the standpoint that a daily chart is easier to learn from. All right, I do my intraday trade plans from a daily and a 4-hour chart. Okay. However, the mentality, morning Timbo, however, the psychology to handle a longer term trade in my mind requires a much more advanced, confident hand. Because you're in the market longer, you got more money exposed over time in terms of unrealized profit. So from a psychology standpoint, managing longer term trades, I find much more vexing. Much. Okay, anyway. So don't shy so far away from the intraday stuff that you're nervous. So anyway, so when I do my planning, here's the way that I look at things. All right, so let's pick a pair, shall we? We're on the pound dollar. We've been talking about cable longs. I'm not lying to you, for 3 days at boot camp. It's finally happened today in one fell swoop. But let's start. Okay, let's just break this down and have a look at it. We'll get rid of some of these lines. All right, so what we're looking for are setups that we can hold, potential major turning point areas, okay, and then figuring out what we're basically going to do in between. All right, makes sense? Now, for starters, why would this be? Okay, this was the chart I published yesterday. Let me see if it shows up. Showed up for a glimpse. There it is again. Just flashing. There it is. It's just flashing like we're in a club in Vegas. Okay. Why would we look for something that goes back to 158? In other words, when we were sitting at 154.5, why would we think 58.5? Well, to me, a couple of things. Yeah, it's made a higher high. This made a higher high with respect to that. Marginal, but a higher high nonetheless. Okay? And this here is exactly this support zone. I use very, very sort of old school technical analysis. Almost embarrassingly simple. Nothing high tech. Very low tech. I see support, 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 support. And I think, well, it's pretty much shown us an inability to head lower. So if it's going to head higher, this is really the spot for it. Yeah, don't worry so much about the oversold thing, guys. I've seen things be oversold for 6 months or overbought for 6 months. Right? The very nature of a trend is that it's overbought, oversold, in my opinion. Anyway, so I see a lot of support after making a higher high. This would be the point of no return for the pound. So we're going to call this our green zone. Okay, I'm not saying this in hindsight. This is what we planned in boot camp the other day. Come on. Okay, you're just going to get a flash of it because it's. Yeah, I'm going to try to hold it on you. Move it around. All right. For some reason, Hotcom's not allowing it to stay on the chart, but yes. Get your dollar bills ready. We're coming in hot. Okay. All right. So, yeah. All right. So the point being, though, is that price action-wise, up. Okay. Major turning point. So in other words, major turning point on the daily, this green zone would be swing trade area. In other words, trades taken in that area would be fire and forget. Those would be trades you try to hold on to. Okay, so if you put a pound long in here at 54.84 today, hypothetically maybe, on a little swing fib on the short term, and it went parabolic, that is a trade that you're not looking to exit. Why? Because you're coming off a major turning point zone on a daily. All right. Now, everything in between, all trades in between here are spot trades. So only trades taken from turning point zones are swing trade opportunities. Okay, in other words, trades you can hold for a while. All right. Now, where would you anticipate, zooming out here a little bit, and we'll even go to the weekly if you wish. Where would you anticipate, zooming in here, where would you anticipate would possibly be the next sort of major turning point zone here? You can have this trend line up here, and we might overshoot a little bit, but what level would you think would be very significant? Just eyeballing it. Look at the data, it's pretty easy to look at. Alright, we'll take a fib of this drop. Well, 157 is important, but bear in mind 007 that we're coming off. How are you doing, by the way? Bear in mind that I'll get rid of this one here a second just to declutter things. Bear in mind that you're coming off a higher low after making a higher high. So we're actually anticipating it making a higher high, I would think. But where would be a zone we'd expect to see significant resistance? Yeah, I would think sort of through here. Okay, based on the fib and based on this stuff. Okay, so now we've got daily turning point areas. Now, do we know if this is going to do this? Could it do that? Could that do that? It's the Olympics. People are going to be saying, London, pound, I'll heart you, I'll heart your fireworks. And sorry guys, girl volleyballers are not allowed to wear bikinis this go around. Because we're coming off higher lows, and we made a higher high with respect to the previous. So by virtue of us making a higher high and a higher low, we're expected to make a higher high. Lots of resistance at 57.20. Lots. And we'd expect a spot trade from there, but not a swing trade. At the moment, we're identifying major daily turning points, which are potentially going to give us swing trade opportunities. What I mean by swing trade opportunities is 200 pips. A trade where we're going to try and we're going to hold it for 36 hours. It will be a trend change on a daily, absolutely. But that doesn't mean to say we're not going to hold this major red zone and potentially do something like this. That could absolutely happen. Okay? So the reason I'm going to draw to a point here. I don't think I'm taking this webinar where I want to take it. So, okay. So these two red areas are potentially swing trade zones. There's one thing I noticed with my mentoring at bootcamp is that a lot of traders think that every trade is going to be this monumental winner. Every trade they take, they expect 274.5 pips. And I'm here to tell you that 90% of your trades are 30 to 40 pip propositions. When you take your trades in massive turning point areas, those are the trades with lots of profit potential. So for me, this pound is not an exit until we hit 58.5 to 59. Okay? Swing trade zone. So here, you're potentially in a situation where we could do this. Why? Because that's a major turning point zone. Do I know that? No, not necessarily. Okay, now, okay, swing trade zone. Swing trade zone. So in other words, the shorts are potential holders. I don't know if it's going to make lower lows off of there. That's Sanjay. That's exactly what I'm saying. Now, everything in between here are spot trade opportunities. So in other words, everything in between, you're looking to take it to the next short-term level of support resistance. Right. So there are spot trade opportunities off these swing trade zones. So let's say you shorted or longed at 80 today here. Where would your spot trade target have been? The spot trade target would simply be the fib of this drop, right around 55.80. We exceeded that, that's fine. But the spot trade target would simply be a bounce of the support to the next short-term level of resistance. Okay? Now let's say hypothetically that price retraced here and came to about 56.40 and you longed it. What would your spot trade target be? Notice how now we're in spot trade zones. What would your spot trade target probably be? Yeah, the double top. The double top. Okay? Right? And then Asia is likely to make a little swing trade. Asia is likely to come down and push up again a little bit. So where would your spot trade target be there? Well, a swing fib extension of this, probably about 80 pips. Now let's say hypothetically that we press up here into London tomorrow, and you are sitting around 59.20. Okay, where would the spot trade target be? The spot trade target be? And what would the trade be? The spot trade target is honestly probably right around this sort of level. Probably trying to take it back to about 57.80. What do you think is going to happen then? Because now you're at a short-term level of support. Yeah, you're going to cruise all the way to the top. So guess what? You're in another spot trade. See here. Right, now you're at a lower high at what is potentially a turning point zone. Okay, now one of two things is going to happen. The market's going to do this and charge up, or we're going to do this, make a lower high and head down. Which one do you know it is? You don't know. You don't know. But when you short through here, what type of trade are you attempting? Swing trade. A swing trade, because if you're right, you're targeting down here. If you're right, you're targeting 152. And if you're wrong, you're probably going to go break even. And I'm not a big advocate of, hey, let me enter my spot trade with a 263 pip stop. No. Your swing trade is entered with your spot trade techniques. So your swing trade, you're just taking a normal spot trade with your normal 25 pip stop. You get it to break even, and the only difference is that you don't take profit. Why? Because you're in a major turning point zone. oh look, I've just run into a swing trade. But everything else between these turning point areas are spot trades because chances are and probability dictates they're probably not going to stick. You with me? So let's do another one. Do you know what I mean by that? I don't dig the whole, oh, let's have, yeah, guys, I do this newsletter for 2-3 times a week, and I do all of these things, a 2-day, a 3-day, a 2-week, a 3-week, and a 3-hour trade plan for you. And I'll give you a money-back guarantee that if 75% of the trades do not work out during the course of the day and month, I'll give you your money back, and it's free. You get it? That's actually a major poor attempt at a joke. So, thank you. All right, so let's do. You just email me, david@fxbootcamp.com. I'll put you on the email list. All right, so let's do another one. We've been talking about at bootcamp. We've been talking about pound yen long. A pound yen long from this 121 zone all week. Okay. And you can actually see what we've done in between here, right? We've got a major daily green zone identified and a major daily red zone identified. How are these identified? Well, potential daily higher low, and if you line up these three here, you know, swing low, swing low, swing low, hesitation area, potential higher low. How do you know it's going to be a higher low? You don't. But, come on. A little bit of price action knowledge and you in there. Okay? Now where's the next major turning point on the daily? Swing high, swing low. Admittedly, you also got some junk through here, but you're probably stepping up. You know, you're probably stepping up to the next fib level before continuing down. Okay? So, so we've got our major turning points identified. Are there any questions on that? Guys, that's support and resistance work. You can do it. You can do it. Does anybody think they would have a hard time working out major turning point areas in the market? It's okay if you, it's okay. I mean, we can work on it. All it is support and resistance. Okay, let me get to questions. I'm following you. Well, okay. Oh, these are just a 5, a 21, and a 200, Mike. How to identify the path just with price action, support and resistance. I'll illustrate here in a minute. How do you move your stop when you're going from a spot to a swing trade? Well, the initial, so let's say, okay, well, the initial break even is just my normal sort of 25, 30 pips. Then I go break even, let it go. Then once it's created an hourly swing high or swing low, then I start moving my stop below the lows. And I'll evaluate my profit target with risk reward relative to the target and then move my stops accordingly. I think there's a video where I discuss it. I did a series of webinars last year. So I'd encourage you just to go to my presenter profile on FX Street, backwards from reward. Yes. I break it up into thirds and then I work out risk reward relative to the target, etc. But I'd encourage you to go to my my speaker profile at FX Street and look at some of the videos, and because I'd love to get into it. It's a whole webinar by itself, but it's all there, and I'm more than happy to talk about it. Okay, so how do we work out the path? All right, so we're coming off our daily turning point identified. All right, now how do you think we came up with 126, 127? I like to use fibs for this sort of thing as zones, because in effect, you're coming off with 50%, and now we're going to step up to the next level, and then probably try to head down. Probably short the euro. I think it's pretty easier just to wait in the wings and long 70. And as far as time of day stuff, I'll find you a link at the end of this, and I'll show you. Also, I hate to redirect you guys, but in the interest of being staying on target, I have a time of day webinar that's recorded on my player profile there at FX Street, and because once again, that's an entire webinar by itself. But I'll find a link for you where I have my slides from Spain, because my whole Spain speech was on time of day stuff. So I'll try and find that link for you, and it has the slides I used, and then it has all the times mapped out. Okay. Yeah, give me a sec and I'll find that for you, no worries. Okay, so, alright, so turning points worked out. Okay, now, thank you, Chris. I use Microsoft Word. I just copy and I take Snagit stuff, copy, paste, go. Like this. Date, session, entry, what you were doing, some remarks. Copy a chart in right below it, or copy a chart in the space. Done. Just that easy. Makes sense? Yeah, you don't need anything high speed. You don't. All right. So coming off support. So give me the next conservative trade here. Anticipate what's going to happen next. Obviously, we're at resistance. Okay, but we know we're on our way up here. So what is the next conservative trade? Probably goes down a little bit. Is this a trade where we want to short? I mean, could we make money out of the short? Yeah. Just bang against your weekly central. You probably could. Heck, you could probably make 100 pips, 80 pips. My problem with that trade is, how do I know when I'm wrong? In other words, directionally, we're actually anticipating this going up, aren't we? I would think so. So if I'm going to take a short, how would I know when I'm wrong? Would I just give it random 30 or 40 pips and just hope that I've timed it? Tough strategy that. Okay, so I think for me, conservatively, picking up the buy side is pretty easier. Where would that be? I don't know, we've got support through here. Hesitation there. We're going to have this 5 EMA popping its little nose up here for Asia. I don't know, this 122.30 zone looks pretty nice. Something like this. You know, probably into here. Nice trade there. Better part of 150 pips. What type of trade is that? What type of trade would this be from point A to point B? Spot trade. Spot trade. You're going to take between 80 and 120 pips and you're going to walk away. It doesn't mean to say you can get creative in between there, right? I'm a big advocate of adding to winners while they're moving. Okay, there's a very advanced skill and I'd like to do a webinar on it at some point. But to me, that's how you make money in Forex. You can spin your wheels, but you don't have to do anything better analytically and make double the money with some creative adding. All right. So, okay, so point A to point B. Then what do you expect to happen? We would have gone up 2 days. We'd be hitting these highs. What do you think is going to happen? And now you're probably thinking Monday now. Monday, Tuesday. Yeah, red day. Pretty a red day. And this will be shortable. Where do you think that's going to go? Down here. Down to this stuff. To the blue line. And then what? To the move fib, exactly. Now what do you think? Now this trade in here, you've actually, okay, so you've gone, alright, spot trade, SP, spot trade, and now you have the move fib of the whole rise, and you're expecting it to go up here, or a fib extension of this to basically these highs. You're talking spot swing trade now. Swing trade. Swing. You with me? Oh, I can just tell there's a lot of glazed over looks. I'm looking at a screen here. I can just read the room. I know that some people are like, what? Yes. And then you'd like to do this and head up there. Spot trade. Thank you, Alan. Little glazed. Well, this is my thing, Harley. No. This is what I'm trying to say. Is the entry technique is the same. You're going to look at your spot trades. You're going to wait for a 15-minute confirmation. When you get it, you grab it. When you have 15, 20 pips, you jam your stop in there. The difference is that you're not taking profit on your swing trade attempts. That's it. Yes, that's it. So I've never been a big believer in, hey, let me give this a 263 pip stop and just hope it sticks, baby, and if it doesn't, I'm ruined. And you can't trade small enough that you wind up trading a mini lot. And when you make 326 pips and it takes you a month and you only make $274, you just want to puke. What's the point? You could work at McDonald's for $8 and be in the market half the time. Nah, spot trade. Dump your couple standards on there. Let it go. Just don't take profit. Okay? Now, do some of them come back and you give back some unrealized profit? Of course. Of course, that's trading. right? This is predicting the future. You might be early, you might be a little bit early on it. Don't be afraid to take it again. But you can take 3 20-pip losses you can take 3 30-pip losses for the price of your 100-pip stop, and what are the chances of you losing 3 times in a row? Probably fairly small. You with me? And then what's going to happen off here? Yeah, chances are you're going to spot trade down to the first level of resistance or support. Then it's going to go up, make a double top, lower high. And now you're trying to swing trade. Where are you trying to swing trade to? The whole fib of the rise. Why? Because you're coming off a 618 of the entire drop and previous resistance. So that there should precipitate a drop of their whole rise again. It's just support and resistance, guys. That's all it is. But you're taking major daily turning points, and then you're taking major daily turning points, and then using your intraday skills to trade within the context of that. It takes time and practice, but you got this. You got this. Okay? So here's what I was looking for on the pound. Okay, a little drop of 55.10, which we effectively had today. Then we're picking up longs around 60, trying to trade this up to around 56.20. Okay, well, we blazed that. So now we're on to the next level, which is around the 57. That should then bring us back to somewhere around 56.40. We're going to try and take it up to 58.60. Okay, 1 week forecast. How about for the next few days? There you go. Guys, I did this before this candle did that. Yeah. Right, and this is the sort of thing you're going to be doing for yourselves. Alright, so this is what I'm expecting on the euro dollar over the next few weeks. Yes. I'm looking for it to come back down before heading up. Alright, so this was, maybe look here one sec. And I'm just showing you this to just illustrate how you can do this for yourself. Okay, so this was the letter I put together on the 9th. Okay, for a daily chart. We were looking for this to go off sort of 23.5 down to 120.50, 120.80, and then bounce. Go look at the level we bounced at. Quick definition of a major turning point. So if you looked at the euro dollar right now and you said to me, if I was going to predict a major turning point on a daily chart, give me a number, give me a range. Give me a range, just eyeball it. Well, Sanjay, it depends where you're coming from to let it run. And just taking, so let's say you longed the pound at 56. Let's say it came down, you longed the pound around between 56.50 and 56.70. You know, realistically, where are you targeting? 57.30. Double top, weekly R1. It's already ran its legs off. Guys, looking at the euro dollar, give me what you think is a major turning point zone in the euro. It's happened twice there already. All you're going to do is look at the chart. It tells you. It's written on there. Yeah, we've found resistance here before, but give me a major turning point area. Bear in mind that you just broke a swing fib, so I'm probably going to move fib. Well, it looks like they sold this area twice. So I would think that this is a pretty big deal. This is resistance, but you just broke the little short-term swing fib, so you're thinking more move fib. So I would think now that we're probably on our route to doing something like this. Yeah, so there's your turning point. So 25, 24.5, 25, yeah. You know, with room for it to overshoot, as these things do sometimes. Okay, but there's a trade, you know, here is where I'd flip courses and I'd start to think, fine, I'm now in a swing trade a potential swing trade zone. So now I'm thinking, right, if I'm going to swing for the fences, this would be my area. You with me? Everything in between are spot trades. So, it comes down to 2260, 2240. I'm longing, looking for double top, maybe a little higher to this next level at 24 and change. Done. Out. 90 pips. Thanks. Day over. You with me? Then we're going to probably come back down to where we started from. Cruise up there. Fine. That's more of a little swing trade. We'd have to be in that 48 hours. Monday's trade. Oh, okay. Now I'm up here. Fine. Spot trade to short-term support. Double top. Range around. Tool around there. Stay out of trouble. And then roll over. Anytime you got daily resistance meets 4-hour uptrend, or daily support meets 4-hour downtrend, you're going to have 24 hours of range and rubbish. R&R. Range and rubbish. Just remember that. Daily support, okay, meets 4-hour uptrend. Okay. Oh, sorry. Downtrend. I made a meal of that. Right. Daily support meets 4-hour downtrend. Equals range for 24 hours. Okay. Daily resistance meets 4-hour uptrend equals range. 24 hours. Sorry, my writing's terrible at the best of times, not least for the mouse. Why do you think that is? Why do you think the pound has been ugly for 24, 48 hours? Because you had this 4-hour downtrend running into daily support. You got all the bears on the 4-hour going, no, this is short. And you got all the bulls going, no, this is long. No, that's short. No, it's long. No, it's short. No, it's fighting it out. You know that when you're in this scenario, you're going to have a 24-hour period of ugliness. BG, if it was easy, everybody would do it, I think is the thing. I'm obviously simplifying it massively to try and sound cool, to be honest. But I totally agree with you. Totally agree with you. It's extremely difficult. But I'm trying to put a few little tools in your hand that at least, thank you, Timbo. I'm trying to put a few little tools in your hand that at least you're equipped to deal with it, not just blindsided. The Bollinger Band can be helpful. Bollinger Band can be helpful, but that's also a little bit reactive because by the time the Bollinger consolidates, you're going to be in the range for a long time anyway. You can anticipate it. I'm telling you that the pound's going to get ugly between 58.70 and 59.30. I'm pretty sure you're going to stay in a nasty range there on cable for about 24 hours there. What do you mean, Sanjay? What do I say about weekly support resistance? Be a little more specific with me. Any other questions, guys? I think we're drawing to the end of my welcome here. I'll be on next month in August, though, and we're going to talk a lot more about time of day related stuff and how to negotiate news and market opens and things of that nature. And we'll have more time then. I'd also like to talk to you about adding to winners. In my mind, the difference between somebody that spins their wheels in trading and somebody that makes money is how they handle their winners. Having the intestinal fortitude, almost said something different, intestinal fortitude to stick with a winner and not fade out of it. All right, guys. Well, I hope you enjoyed it. If you have any other questions, if you want a little copy of the newsletter, it's free. David at fxbootcamp.com. You'll get it twice a week. Also back doing London Outlook videos. So look out for those on our YouTube channel. Maud, it's been a pleasure as usual, and I'm sorry for being the worst email replier to her ever. Okay. I thought I replied, no? Oh, you wanted to change the subject? No, we'll just go with the subject you wanted me to do. Yeah. No, we good. I'll reply. I'll reply. I'm sorry. All right, guys. Good luck further. And a good way to reach me is at 4xDavid on my Twitter as well. Thanks, guys. Cheers.